Wallace, and welcome to FinextraTV. Kindly joining us today to talk about regulation and what's working to benefit the entire ecosystem and its customers is Mitch Trehan, UK Head of Compliance and MLRO at Banking Circle. Mitch, thank you very much for taking the time to speak with us today. It's great to have you on.
Hey Hannah, it's good to have you here. Thanks.
Really good to have you on. Now, I want to first start by looking at this idea of collaboration between regulators and organisations, which was undoubtedly boosted by the pandemic, but a cooperation that has existed for many years, hasn't it? And many would argue that the dialogue between the two is actually strongest in the financial services sector than many other industries. So with that in mind, and with markets, customer needs and technology constantly changing, do you think regulators are doing enough to stay ahead and keep on top of those new requirements? Let's start there.
Interesting. I think my answer has to be yes and no. And I know that's a cheeky response, but let me please explain why. It all depends on the country. So here in the UK, I think the FCA, PRA, the larger regulatory regime is doing well and is staying ahead. So, for example, we have regulatory sandboxes, which allows firms to come and play, to develop new products, to help with innovation. And then when firms actually do firstly get authorised, there's what's known as a regulatory nursery, where the supervisors, regulators are helping newly authorised firms to manoeuvre and navigate through the regulatory requirements. And when you take that with the sandbox, it really can help with innovation. But I also said no. The international playing field isn't the same. And I think we do need more international collaboration. Things are good at the sort of highest level policy aspects, but as soon as you get down into the grassroots, the implementation, there's a lot of different things, and every country has their own cultural approaches which can help or can actually hinder. Some countries are moving faster than others, and that isn't good for the international playing field. So I'd say yes, some regulators are, but some still have more to do. And I think from my perspective, what really would help, and I might be a bit biased sitting here in the UK, but let me explain the way regulation can happen. You've got rules-based regulation, you've got principles-based regulation, and then you've got outcomes-based. And that's more the supervisory approach. So if a rule says you must do ABC, and you do ABC, but it actually has a detrimental outcome, under a rules-based supervision, you've done everything correctly. But I don't think that's really what should be right. In the UK, we operate in a principles-based regime. So if you've done everything technically correctly, but under a principle, it's like that's obvious that that's not quite right, then there can be consequences as a result of that. And I think that's really good for innovation, because it's not about anymore the law says this, the rule says this, and you cannot operate outside it. You operate on that principles-based regime. But the world is now moving towards outcomes-based, which for me, by far the best. What is the actual outcome that happens as a result of what a financial services firm does? If they're doing things right and the outcome for the consumer or the business is positive, well then yes, you can innovate, you can develop, you can move faster, move forward, always keeping in mind that the outcome is the most important thing rather than the technical, this must equal that. Outcomes-based is the way forward, and that's the way the industry and the world is moving. Let's remember, purpose of regulation is, in my mind, two things. One, protecting consumers, and two, increasing competition. That's why regulators were about, as you increase competition, that actually ends up protecting consumers. And if you increase competition and have these outcome-based approaches, then I think that will really help innovation at large.
All right, that's really interesting start there. Thank you so much for bringing us up to date. And so as a compliance officer then, perhaps you could share some examples of areas where regulation might be having a negative impact on customers.
Oh, that's an interesting one. So as a compliance officer, in my heart and soul, I actually can't say that I believe there's a regulation that would have a negative impact on customers. That's beyond the sort of intention. But I mean, thinking big picture, thinking from experience, I'd say sometimes there is unintended consequences. One of the parts that's coming to my mind is AML fines. Now, again, I wholeheartedly agree that money laundering and the prevention of that, I mean, I'm a money laundering reporting officer, right? That is key, first and foremost, and must be done. And banks are getting larger and larger fines. I mean, looking back to 2012, HSBC were fined billions for money laundering breaches. And what that did, and again, rightly so, because we need to do this, but what happened as a result, which may have been more of an unintended consequence, was it started this de-risking movement. More and more banks were looking at these fines, looking at actually how difficult it could sometimes be to prevent this type of money laundering risk coming through, and had to weigh up, where do we see these risks? What types of clients should we work with? Should we not work with? And when they choose not to work with certain clients, they end up de-risking, which means they've chosen that they don't have appetite to work with certain geographies or client bases, payment services firms, for example. So that in turn means that some people that really can only get access to financial services, those that they're called financially excluded, but quite often it's because of lack of appropriate documentation, immigration, higher risk industries where people just don't have appetite to touch it. It makes it harder and harder for those people and businesses to be part of the financial services ecosystem. And if you make that harder, they get further and further downstream or pushed down from banks, which actually can increase risk. So that's what I say. The regulation has the right intentions, but there can be unintended consequences as a result of it.
All right, so we can easily agree that the regulation there is there for good reason. So tell me, how can regulators help to avoid wholesale de-risking and lessen this unintentional impact on the customer? What about that?
Well, I think the first part is what regulators and supervisors are starting to do is supervise more, right? So thinking about when I would mention de-risking, I was talking about banks that provide services to other supervised, regulated payment service firms or other banks. And as regulators and supervisors spend more time supervising those that they regulate and authorize, that gives comfort to the other banks that are providing those services, right? Don't forget, banks are always taking a risk when they provide services to another regulated entity. And if that regulated entity is too small to supervise or something goes wrong, the bank at the top of the chain is taking a lot of that risk, because if financial crime happens, it still goes through that plumbing and those payment rails. So as increased supervision happens, as regulators work closer with industry, which we see happening, there are a number of trade bodies and a number of banks that actually talk a lot with the regulators. And as that communication increases, so too does this prevention of these unintended consequences. The ecosystem works better together. And that's one of the things that really does make things better. And I think we've got a wee bit to go still, but it's definitely a step in the right direction. And one other point, regulation itself can help slow down or prevent de-risking. PSD2, for example, that had a requirement in it that if a bank is providing services to a non-bank payments firm, it must do so in a proportionate, objective and non-discriminatory manner. That's actually now a part of legal requirements. So that in itself does also helps the ecosystem.
All right, so still a way to go, but that's a positive note to move on from. And I know in the past you've spoken about working with your international clients at banking circles. So I'd love to expand on that a little bit and how you're working with those banks and financial institutions make transactions easier across the world.
Thanks for that. So yes, at Banking Circle, what we do, our bread and butter, is providing services to other banks and other payment services firms. And the most part for that is they want to trade or help their customers trade internationally. With any sort of international trade, there has to be a payment. Someone's making a payment and someone's receiving a payment. But on top of that, there's also different currencies. Euro, sterling, dollar is the main examples, right? The G3 currencies as they're known. What Banking Circle does is our technology platform and our client base is all specifically matched together. And by that, what I'm saying is we are here to provide services to that specific industry. As a result of that, our products, our services, our employees, our expertise is finely tuned for that niche industry. And then as a result of that, because that is what we do, clients of ours are less likely to be de-risked. We don't have other streams or client streams whereby we could say, oh, we'll focus on that rather than this, as other banks have done. This is what we do. And how we do it is we are getting direct access ourselves as a bank to the different clearing houses and settlement houses of different currencies, sterling, dollar, euros, Danish krona, etc. Which means our customers and clients are only ever one step removed from that clearing house, which makes things quicker and faster.
Brilliant. Well, Mitch, thank you so much for sharing your insights today and clarifying a few things for us. And it's great to hear a bit about what Banking Circle is doing. But we'll leave it there for now and really look forward to catching up further down the line. Thank you very much.
Thanks very much. It's been a pleasure. Cheers.